standard of living can become a challenge. This is where SCHD's history of growing dividend payouts offers a solution. Over the last several years, SCHD has achieved a consistent annual dividend growth rate of around 9 to 10%. If this trend continues, it could outpace inflation and protect your purchasing power. In fact, dividend growth can act as a buffer against inflation. When your dividends grow faster than the cost of living, your spending ability may actually improve. However, as always, it's important to remember that past results do not guarantee what's to come. The impact of taxes and costs. Another factor to consider is taxes, which can reduce the amount of income you take home. Dividend earnings are considered taxable income, and the percentage you owe depends on your income bracket. Fortunately, SCHD pays qualified dividends, which are taxed at a lower rate compared to ordinary income. For most people, taxes on qualified dividends range from 0 to 20%, depending on their earnings. For instance, if you fall into the 15% tax bracket, the $3,500 in annual dividend income discussed earlier would decrease to about $2,975 after taxes. The more you earn, the higher your tax obligations will be. Additionally, fees must be taken into account. SCHD is known for its ultra-low expense ratio of just 0.06%, one of the most affordable rates in the industry. This keeps more of your returns in your pocket. However, even a small fee like this slightly reduces your overall earnings. Looking ahead with SCHD, inflation, taxes, and fees are all factors that will impact your dividend income in real life. That said, SCHD's low costs and strong history of growing dividends make it a solid choice for creating a long-term income stream. Chapter 4. SCHD's track record over time. Now let's look at how SCHD has performed since its creation in 2011. This